If you are planning to start a business in India, one of the most common questions is this: should I register a private limited company? Most people either overcomplicate it or do not fully understand what it actually means. In this video, I will explain everything about private limited company registration in a simple and practical way. Hi, welcome back. If you are starting a business, choosing the right structure is one of the most important decisions. A private limited company is one of the most popular options in India, especially for startups and growing businesses. Let us understand what it really is and whether it makes sense for you. What is a private limited company? A private limited company is a business structure registered under the Companies Act 2013. The company is treated as a separate legal entity, which means it is legally different from its owners. If the business has losses or liabilities, your personal assets are generally protected. Your risk is limited to the amount you invest. Why people choose it? There are a few practical reasons why many businesses choose this structure. It gives better credibility with clients, vendors, and banks. It offers limited liability protection. It is suitable if you want to raise funding or bring investors. It provides a clear structure for long-term business growth. Basic requirements. To register a private limited company in India, you need at least 2 directors and 2 shareholders, and they can be the same individuals. At least one director must be a resident of India. You also need a registered office address in India and a unique company name. Documents required. The document requirement is straightforward. You will have to provide PAN card of all directors, identity proof such as Aadhaar or passport address proof such as bank statement or utility bill, passport size photographs, registered office proof along with rent agreement or ownership proof, and NOC if applicable. Registration process. The registration is done online through the Ministry of Corporate Affairs portal. First, digital signature certificates are obtained. Second, director identification numbers are applied for. Third, the company name is reserved. Fourth, the incorporation form SPICE Plus is filed with all details and documents. After verification, the certificate of incorporation is issued. Now, while the process looks straightforward, small mistakes in documentation or name approval can delay your registration. That is why many founders prefer professional help. Platforms like Ebizfiling assist with the complete process and ensure everything is filed correctly. Cost and time. The cost depends on government fees, professional charges, and stamp duty. In most cases, it ranges between 6,000 to 15,000 rupees or more. The time required is usually 5 to 10 working days if all documents are correct. Compliance after registration. Registration is only the first step. After incorporation, the company must maintain accounts, file annual returns, and meet statutory obligations. Even if there is no business activity, certain filings are still required. Common mistakes. Common mistakes include choosing a name that gets rejected, submitting incorrect documents, not planning shareholding properly, and ignoring compliance after registration. Even small errors can delay approval, which is why many founders choose professional support. If you found this video helpful, you can subscribe for more practical business and compliance content. If you are planning to register your private limited company, you can connect with Ebizfiling for guidance. You can also drop your questions in the comments.